Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's the last trading day of the week, last trading day of the month, and the last trading day of financial year FY25. Given the fact that we have a market holiday on Monday, if you look at the series per se, the March series, it was a positive one. We had a positive series for the first time in 6 series because the markets have snapped out of a 5 series losing streak. Since September, markets have recorded their biggest gain in a series. The Nifty Bank Index posted gains of somewhere around 5% or so in the March series, and IndusInd Bank, Tech Mahindra and Infosys were some of the losers this series. Of course, as I mentioned, last trading day of the week, the month and the financial year. Let's see how really the April series kicks off, because the global sentiment isn't all that great. If you look at this morning, the GIFT Nifty also, hinting at a muted start for our markets. And if you look at the pre-open as well, we could be defying that trend because it is hinting at a positive start, a mildly higher start. Let's see whether or not we manage to do so, because we did see one day of sell-off coming in the middle of the week, and yesterday as well, after a wobbly open, we staged a very good comeback. In fact, we reclaimed that 23,600 mark on an intraday basis. 23,412, I think that was the low yesterday on the Nifty, and we need to defend that level, for any kind of an upside, so to say. But 23,800, we did reclaim that briefly. Any decisive close above that could really indicate that we are in for an uptrend. But yes, lots to talk about. Over the next 40 minutes or so, some stocks to take stock of, BSE being the stock of the day. We'll talk about that in details. We'll also be taking up all your stock related queries, so keep them coming in on our live feed. We will try and get them addressed on the show as well. Quickly take a look at the top headlines before we bring on board our technical expert for the day. Wall Street indices end lower as investors weighed President Donald Trump's new tariffs aimed at foreign automakers. The Dow Jones lost somewhere around 155 points. Meanwhile, Asian markets are also mirroring Wall Street move. The GIFT Nifty is indicating, a muted start for our markets. Oil prices edge higher on tightening of crude supplies along with new US tariffs and their expected impact. Meanwhile, gold scales a record all-time high on safe haven buying. Well, the Nifty index undergoes a series of changes from today. Jio Financial and Zomato will now be included and will replace BPCL and Britannia Industries. And market regulator SEBI recommends limiting expiry days to either Tuesday or Thursday for all equity derivatives, following which NSE has deferred its plan to change weekly expiry date to Monday from Thursday. And the government plans to raise 8 lakh crore rupees, or 54% of its FY26 borrowing target, through dated securities in the first half of FY26. Now, this includes a 10,000 crore rupee via sovereign green bonds as well. Well, those are the top stories, but quickly taking you through the cues for trade. Yesterday, we managed to reclaim that 23,600 mark after a wobbly start, but it was the auto pack that was feeling the pressure after Trump announced a 25% tariff on foreign automakers. Now, Tata Motors slid almost 6% as US tariff will hurt JLR volumes, 30% of JLR volumes, so to say. Meanwhile, Samvardhana Motherson, Sona, BLW, Bharat Forge, all these stocks, auto part makers also slipped on US tariff concerns. But Samvardhana Motherson has said that the impact, of course, on the company due to the tariff will be minimal. We'll take stock of that stock as we go forward. But, if you look at the last 1 year return, since we are at the end of FY25, I just want to point out it was a fairly topsy-turvy year when we saw the Nifty and in fact the entire market see prolonged selling pressure. But, for the year, it's a 6% gain on the Nifty index, if you look at the yearly basis. And, in fact, if you look at the mid-cap index as well, the last 1 year return has been around 8%, and the falls for the small cap index, it's somewhere around 6% or so. For the month of March so far, we've seen of almost a 5% uptick on the Nifty. For the mid-cap index, it's 5.5%, and for the small-cap index, it's a 6.5% kind of a gain. But lots to watch out for in April. You have, of course, that April 2 deadline. You have RBI MPC meet and the all-important earnings season. If the earnings season, springs some positive surprises, you never know where the Nifty will head, in terms of, higher levels. In terms of the F&O ban list, Hindustan Copper has exited the ban list, so no stocks in F&O ban for today. I want to also talk about the fund flows. Foreign investors were net buyers worth 11,111 crores, but of course, a lot also had to do with the flows relating to index rejig, because Zomato and Jio Financial saw some bit of inflows, and because of that, you're seeing the FII figure at where it's at. The domestic market or domestic investors rather were also net buyers to the tune of 2,500 crore rupees in the cash market. But on that note, let me bring on board our technical guest for today. Joining me is Sudeep Shah, Head of Technical and Derivative Research at SBI Securities. Sudeep, we've had a good March series thanks to the last 7-8 sessions when we've seen good gains coming in. We did reclaim that 23,800 mark briefly, but given the fact that we are around that 23,600 mark, and most experts also say that worst on the tariff front may already be in the price, what are your thoughts as we kickstart the April series? Do you think the index has seen the worst, and here on we would see up moves irrespective of what happens on the 2nd of April?
Good morning, Nandita, and warm. Nandita, what is happening is that if you see the global markets in the last several sessions, we have seen some kind of a choppiness post that pullback, and now everyone is waiting for that 2nd April announcement, what is going to happen. But 2nd April or no 2nd April, see, Trump has already started with its auto tariffs way before the 2nd April deadline. So it's just that date. He could come out with anything, any moment. So the markets have to be prepared for that. Having said that, what has happened is that in March we have seen, say after 5 or 6 months of continuous downtrend, there was this oversold nature of the market which led to this pullback. And that is the reason we have seen that 1,800 points pullback in just 15 sessions. And ultimately the markets shut shop for the series with an impressive 4.8% gain. See, what we feel from here on is that 23,300, 23,400 will act as an important support. Now here, there's a confluence of a 100-day, 200-day exponential moving average, as well as the 23.6% Fibonacci retracement of the previous rally from 21,964 to 23,869. So we feel that this zone now 23,400, 23,350 will assume significance going forward. On the upside, last few days we are seeing markets halting around this 23,780, 23,850 mark, and this now becomes an important resistance. So essentially, ideally, the markets would be trading in a range between this 23,400 and 23,850, 870 mark for the next few sessions. What is, however, positive here is that the market breadth for all the single stock futures for the March month has tremendously improved after 5 months. So that is a welcome sign. Plus, another important perspective to look at this is from the long short ratio of FIIs. The FII long short ratios is somewhere around 39%, and this is quite better compared to the last 3-4 series at the beginning when the long short ratios were in the range of 10 to 15% or 18% thereabouts. So we feel that markets are trying to pull back, but we will have to see, and markets may consolidate for a few days before the next leg of the up move. So 23,350, 23,400 for us now assumes significance, and that could be the trend decider for the next couple of weeks.
Okay, of course, we will be watching out for April 2nd. Of course, that's the next major event to watch out for ahead of earnings season and the RBI MPC meet as well. But talking about the Nifty Bank Index, would you say that a close above 52,000 will be a trend decider now, whether that uptrend is intact? because even though Nifty Bank Index staged a good comeback yesterday, it did cool off after reclaiming 52,000 mark briefly.
See, I feel Bank Nifty is on course
Sudeep, we'll
of
come to that
not
in
even
just a bit.
52,000. I feel it can. Yeah. Please go on.
Just 1 second, Sudeep. The markets have opened up, and I want to see what the Nifty is really doing. In tandem with what the pre-open was indicating, the Nifty has had a fairly quiet start, but it's on the positive side with a positive bias, so nothing really to complain about. The Sensex is up somewhere around 70 points or thereabouts. 77,650 is where it's at. Nifty around that or above that 23,600 mark as we speak. The mid-cap index is showing quite a bit of strength, almost 1% higher on the Nifty mid-cap index, and as of now, the breadth is firmly tilted in favor of gainers, 3:1. That's the NSE advanced decline ratio. But I want to see what sectors are taking the lead, because yesterday, of course, we saw a fair bit of sell-off when it comes to the auto pack and even the pharma basket. Given the fact that after tariffs were announced on autos, even pharma saw some bit of caution, given the fact that Trump has said or indicated in the past that autos and pharma will be subject to tariffs. So nothing announced in terms of pharma yet, but of course there was a fair bit of caution. But autos have recovered some ground after a 1% cut yesterday, trading in the positive zone, 0.3% kind of gain coming in on the auto pack. Even pharma for that matter, positive bias, very flat, but still trading in the green. The metal pack is also trading with gains. What's not doing well is the FMCG pack, down somewhere around 0.2%. IT pack is also down 0.5%. PSU Bank Index, after strong gains of 1.5% yesterday, is trading with a negative bias. For the Nifty Bank Index, I want to see what it's doing. Okay, it's trading in the positive zone. 51,600 is where it's at. Before taking a look at the gainers, I want to see what shares of BSC are doing at the current juncture. Of course, SEBI has intervened in the expiry day war between the exchanges, and yes, BSC, after a 4% uptick, it's up 9%. One may say that the concerns over market share loss in options segment for BSC may have eased. And just was reading some brokerage reports where Jefferies has pointed out that this could be a trigger for re-rating. So yes, the stock is up 9%. Stock of the day, so to say, BSC, a reprieve coming in when it comes to changes in expiry day. Aside of that, let's take a look at some of the other gainers at this juncture then. On the Nifty, in terms of top movers, you have Tata Consumer. This stock is up 3% as we speak. BEL, of course, defense stocks, a whole host of them will be in focus on the back of order wins and a lot of positive news flow. So we'll take stock of that in just a bit. But BEL stock is up 1.5% among the top gainers. Kotak Mahindra Bank has rebounded. Ultratech Cement also among the gainers, and of course Jio Financial trading with 0.8% kind of a gain. It has made its entry on the Nifty 50 index today, and so has Zomato. So let's see what the shares of Zomato are doing right now. Okay, the trading slightly in the negative zone, 0.2% kind of a loss when it comes to Zomato. You may call it eternal because the company has changed its name. On the flip side, let's quickly take a look at some of the losers then. You have M&M, that's the top laggard today. Infosys, Wipro, HCL Tech, all these tech names are also under pressure, and the pharma names continue to be under pressure. The likes of Sun Pharma, Cipla, Dr. Reddy's, all of them are under pressure, and so is other auto and banking names also. IndusInd Bank yesterday saw some bit of buying action, but today again it has slipped into the red. But Sudeep, would you want to share your thoughts on BSC in particular first? Stock is up 9% in a matter of 2 sessions. We've seen an almost 15% kind of a gain coming in on this particular stock.
That's a fantastic move. Actually, see, yesterday SEBI has intervened, and I feel that is the right way to go, because Friday's expiry or Monday's expiry, and it was going to be a nightmare, because a lot of option sellers, when they sell their options on Friday or Thursday, and Monday morning they wake up to global cues, and it was scary kind of. So I feel that's the right move that has happened. spacing decent amount of time between two expiries also was on the cards, and I feel that that has been shared yesterday. The views have been shared by SEBI, and rightly so. Now mostly it has been deferred also. So I feel, see that the entire thing what has happened, that is positive for BSE. And the right from the day when sorry, right from the day when that announcement was made of changing of expiry of NSE to Monday, that day we had seen BSE opening a negative, and from that day onwards, the trend was completely negative. And this is a game changer, in my opinion. So for me, I feel this now, see, right now it is up 9%. But what I feel is that even if it consolidates here, we are now looking at a healthy uptrend in BSE. And from here on, any dips should be used to go long from a medium term perspective.
Okay, and that's the view. You can look at going long on a BSC. But let's talk about some of the names which are in news in terms of defense orders. HAL is one. It has revised its light combat aircraft contract from 5,989 crores to 6,542 crores. The stock is trading in the green, and defense stocks have seen a good recovery over the last 1 month. Some of them have recovered even 20% from their lows. Bharat Electronics has secured new orders worth 1,385 crore rupees. With that, its FY25 order book has reached 18,415 crore rupees. Remember, the guidance was of 25,000. So it has already reached 18,400 out of that. Aside of that, there are some other companies that are also in focus, and Defence Ministry has signed contracts worth 2,500 crore rupees with Force Motors and M&M. I can see M&M is the top Nifty laggard as we speak, but Force Motors is up somewhere around 5% or thereabouts. What's the deal with M&M? Even if you look at the YTD chart, it has given negative returns, 13 to 14% down. 2024 was a solid year for M&M. Would you say there are signs of fatigue still on the shares of on the charts of M&M, and how do you look at Force Motors?
Nandita, right now M&M is at a very crucial juncture. 2580 where 2600 zone now becomes a very critical support. So what I feel is, and this zone has not been breached, I guess, right from July, August 2024. YTD it is negative, but if you just consider last 7-8 months, the stock has come back to the same price. So for me, 2550, 2600 or 2550, 2580 on M&M will be an important support zone going forward from a positional perspective. And now coming to Force Motors, yes, Force Motors here, it's on an uptrend, 5% up today. But if you see, the stock has now broken about its resistance of August 2024 also, and now maybe from higher levels today it has slightly corrected, but that's okay given the magnitude of the rally in the last few sessions. Overall now, 8,800, 900 zone will act as a strong support. And on the upside, the stock slowly but gradually is headed up to the five-figure mark, more than 10,000, 10,500. So it's a good stock to hold if someone is holding, can continue holding in their portfolio.
Okay, that's the view on M&M and Force Motors. But between HAL and BEL, which one would you prefer? Because HAL has been a better performer if you see the last 1 month price action. HAL is up somewhere around 37% and BEL is up somewhere around 24 to 25%. Both the stocks are in news, a lot of positive news flow when it comes to defense names, and comes as a reprieve, right? Because the defense stocks have seen a fair bit of correction. In this rebound, leg of rebound, which one would you prefer between the two?
Anita, I would actually split my money into half between both the stocks, because both the stocks are of utmost good quality. And BEL, from a stability perspective in a portfolio, from a defense angle, holds significant importance. And HAL is kind of a high beta play. But both the stocks they are of good quality, and I feel one must be equally invested in them. If from a defense perspective, if you need to have 4 5 stocks or 3 4 stocks, then definitely HAL, BEL, Mazgaon Dog, they all top the list.
Okay, that's the view then. But one more stock I want to get in your thoughts on is Reliance Industries. The stock has started doing well after prolonged underperformance. In fact, even on a YTD basis, the stock has given positive returns. Now, just going through the greed and fear, long only portfolio changes, where they've increased their weightage on RIL by 2%, and they've done so by shaving off HDFC Bank and SBI investments by 1% each. But in terms of RIL in particular, what is the next resistance level you would be watching out for?
Uh, Nandita, I feel for RIL, there is this resistance at 1310, 1315 zone, which it's finding it difficult to cross. So for me, 1310, 1315 will be that all important number that I would be watching out for from a trend change perspective. Now, mind you, in the last 2.5 to 3 months, every time the stock has approached this 1315, 1318 mark, it has not been able to sustain at higher levels, whatever may be the market conditions or the condition of the stock at that moment. So that is the reason these price points are very important. And once this stock closes above 13.5, 13.50, 13.15 levels thereabout, then it has a clear move, a clear runway up to 1400, 1430 levels. And I feel that 1315 zone is not only important for Reliance, but that is very, very important for Nifty also. Because the moment Reliance crosses the 1315, 1320 mark and closes above that, it would mean a good move for Nifty also, with Reliance contributing the most at that point.
Sure. Okay, that's the view then on Reliance Industries. Just disclaimer, we are part of the Network 18 group. Please consult with your advisors before making any investments in Reliance Industries. We're not recommending anything here. Let's talk about the chart of a Capri Global as well. What do you make of the price action on this particular counter? Day before yesterday, saw very strong gains. Yesterday, it tumbled 28% from its highs, from its intraday highs, and today again it's up somewhere around 8%. I mean, anything you're spotting here? Anything in terms of what is leading to this kind of a divergent price action move?
I just lost out on the stock name. If you could just repeat that, please.
Capri Global.
Okay, yeah. Uh, See, Capri Global, now it's a very volatile, very noisy chart. Now, if you see the last 2 3 days price action, that's a big candle. But just keeping that aside and going on a weekly or a monthly time frame, I feel the stock is still on a downtrend. It was just that one-off move from oversold zones, and until and unless the stock is managing to close above 190, 192 levels, this stock is not in a medium term uptrend. It's just in a consolidation band between 160 and 190, and it's a wider band. And so that's why one can expect high volatility in this counter. But look to add from a medium term perspective only once it crosses 190 levels.
Okay, only once it crosses 190, you should look at look at this counter from a medium term basis. But let's shift focus to our queries then. Viewers, keep sending in your queries, please. We will try and take them up with Sudeep, as many as we can, so to say. The first one's coming in from Shweta Naidu, and she wants to know what she should be doing with her holdings in Dixon Technologies. She bought it at 15,210. She wants to know if she should add more, hold it, or exit. She's making a bit of a loss because the stock is somewhere around that 13,580 mark. What should she really do?
Just lost on the stock name. There's some issues.
I'm talking about Dixon
Yeah.
Technologies here. Sudeep, if you can hear me.
Yeah, yeah, yeah.
She's making a
See,
loss
Dixon
here,
Technology.
15 to. Sure, go ahead.
Nandita, I feel yeah, Dixon Technology is right now on a weaker footing. It's very close to its support zone, and the support is closely around 1,850, 12,900 mark. All attempts to cross this 14,500, 14,600 mark and close below that have been met with selling pressure. And we have seen right in the first week of March also, and right now, even in the last week of March. So both the times there were two attempts made to cross this, and it's not able to cross this. So I feel, see, the stock quality of the stock is very good, but the fact that it is expensive, it is right now just trying to consolidate, and I feel there could be some more consolidation going ahead. So just stay put. Do not try to average right now. Wait for some days and see whether the reversal is credible or not, and then start averaging or start adding at lower levels.
Okay, that's the view on Dixon Tech. Stay put, that's the advice. Shweta, I hope that answers your query. The next query is coming in from Kishore, and he wants to know your thoughts on Ahluwalia contracts. The stock is, fairly sideways if you see today's price action. But even in the last 5 sessions, it has been sideways only. In the last 1 month, it has seen good traction, 25% uptick. Do you think this up move that the company has seen or the stock has seen over the last 1 month is sustainable, or do you think it is losing steam because it did try to recover on a YTD basis? It's still in the red.
Uh, See, if you see Ahluwalia contracts, the stock is still in a downtrend. It's just that in the last 1 month or so, with the mid caps recovery, this stock also has recovered. But from a bigger picture, if you see on the monthly chart, the stock is still on a negative footing. And we feel that 850, 870 in the near term would pose a significant resistance. So until and unless this is not crossed, we will not advise to go long. Wait for some time, you'll get good opportunity, or some better stocks also in place of this.
Okay, that's the view on Ahluwalia contracts. I hope that answers your query, Kishore. The next one is from Satya CK, wants to know whether GE Shipping warrants a fresh long at the current juncture. Is it a buy at current price, or should one wait? In tandem with the recovery in some of the mid cap names, we've seen a good recovery in GE Shipping as well, right? In the last 1 month, it has seen 15% uptick. But would you still wait it out before getting into the counter before taking fresh longs here, or is it an opportune time?
I feel sure one should wait for some time before adding this stock, because the stock is on a downtrend, and another 7-8% downside or 10% downside from the current levels also cannot be ruled out.
Okay. All right, that's the view then. I hope that answers your query. Naveen has a query on ONGC. I think the stock is among the losers today, if I'm not mistaken. No, in fact, it is among the gainers. The stock is up 2.5% right now. Within the oil and gas pack, how is ONGC stacked up now? It's the second top gainer on the index. Is it worth a buy now, or how would you approach it?
I see. I feel only that this stock is a slow mover, but yes, definitely from a price point perspective, this is a good zone to enter. The stock already had made a high of somewhere around 350, 350, then corrected. Time-wise correction also has happened, and now slowly the stock is trying to come back to its footing. So overall, I feel 235, 230 zone will act as a strong support, and on the upside, we could see levels of 275, 280 in the coming few months.
Okay, that's the view on ONGC then. Naveen, I hope that answers your query. I can see a query on NLC, Nibeli Lignite. Victoria Swami wants to know your thoughts. If you track it, what would your strategy be on this stock?
Which just lost. Oh, if you can just repeat the stock, there's some
NLC.
disturbance coming in between. NLC.
The stock name is NLC,
Yeah, yeah, yeah.
Niveli Lignite.
Uh, Yeah, yeah. See, that the chart is right now in a range from a say 1.5 year time period. We are seeing the stock trading between 205 and 270, 275. So it's in a wider consolidation range. The stock could still continue consolidating but from an extreme short-term perspective, there is some decent bottom formation happening here, and 230, 235 now becomes an important support. And on the upside, this could move up to 270, 275, which is the upper part of the range. And once that crosses, a bigger breakout is on the cards.
Okay, that's the view then. I hope that answers your query on NLC. Victoria, the last query really for the day coming in from Debu K wants to know your thoughts on Sharda Crop Chem. The stock has seen a good 20% bump up in the last 1 month. Do you think that up move has more legs? Today it's down a percent or so, but 595. What's your thought here?
See, the last 1 month, the stock has tried to form some kind of a bottom. But for me, an important level from a positional perspective would be 630, 625 levels. The stock needs to cross above this and close above this for a decent move up to 730, 750. So 625, 635 zone will be very important, and that has to cross.
Okay, that's the view. I hope that answers your query there. But with that, we've come to the end of the query segment. And Sudeep, before I let you go, recommendations for viewers for the next couple of sessions or for the coming week?
See, I feel a couple of stocks that are doing well from a positional perspective. And I would like to go with large caps right now because mid caps could still turn volatile in the initial part of the fresh series. So the first stock that I have on my radar is Ultratech Cement. A decent pullback from the lows of 10,200, 300, and now back to its old highs near the consolidation range. So, this has seen good rollovers also. So, 11,200, 11,300 will now act as a support until this holds. Ultratech could move up to 12,100, 12,300 on the upside. The second stock that is on my radar is Kotak Mahindra Bank. Now, a decent, good rollovers after several months. Even last month also was good, but compared to the last 9 to 12 months, Kotak Bank has seen some good rollers, and that there's a strong breakout on the weekly and the monthly charts. So positionally, the stock now looks headed up to 2,400, 2,500, and one should accumulate on dips at the current level and on dips with 2,050 as a stop loss.
Okay, those are the recommendations coming in from Sudeep. With that, Sudeep, would like to thank you for taking out time and joining in and sharing your thoughts with us. Always a pleasure, and wish you a happy long weekend.
Thank you. Same to you.
Thank you. Well, on that note, quickly take a look at the market before we bring on board our next guest. Of course, we've given up those opening gains on the index level. Both the Nifty and Sensex are trading down, by 0.3% or thereabouts. But the mid-cap index is holding on, and it's a good 0.5% uptick on the mid-cap index. And the breadth is also fairly positive, almost 3:1. But on that note, let me bring on board our next guest for today. Joining in, Mayuresh Joshi, Head Equity Research at William O'Neill India. Mayuresh, great to have you on the show. After positive March series, would you say there's a spring in the steps when it comes to the way forward? Quite a few events to watch out for. The April 2 deadline looming. We have the RBI MPC meet, and the earnings season also kicks off. So, how are you? How are you approaching the market now going forward?
Morning, Nandita. Pleasure to be on your show in the first place. I think everybody's waiting with bated breath on what happens on April 2nd and what does Trump announce in terms of tariffs. But one thing is getting very, very clear that if the tariff impositions happen at the rates at which these tariffs are expected to be, I think a large part of the hit that the American economy itself will take will be quite significant in terms of price increases that will be needed to be taken across sectors, across industries as well. And that's just not tenable. And therefore, I think there will be bouts of negotiation, renegotiations on tariffs, reciprocal tariffs, which will take place. And therefore, post April 2nd, I think the next few weeks, in my opinion, will be highly volatile in terms of how these negotiations take place. Having said that, from a macro perspective, as far as India is concerned, I think a large part of the calendar year was largely dominated in terms of monsoons, floods related to that, elections, liquidity not being there in the system, so on and so forth, and then for capex not coming in from the government side. But all that has probably changed. And as we hit the first quarter of this year, RBI has provided enough liquidity into the system. We're already seeing government capex come back very, very strongly. Tax cuts have got announced into the budget as well. And therefore, with the expectations that the first quarter and first half would see significant amount of discretionary spending coming through, a mix of government capex coming back very, very strongly, liquidity infused into the system, and expectations of a very good monsoon because of La Nina conditions evolving. Rural consumptions, signs of urban consumption, earnings trickling back post Q4, though Q4 will be soft in my opinion as far as corporate earnings are concerned, might hint to a better earnings recovery as far as Indian markets are concerned. And therefore, I think outside the US, I think if there is one market which might actually do well, assuming macros turning, micros turning, Nandita, that actually might be India. So I think we might go through a volatile phase. But in my opinion, I think as we hit the first quarter of the next financial year, I think things will start showing improvement as far as India is concerned. And therefore, the markets should also start reversing, in my opinion, in a positive fashion, bottom out as we end Q4 or the next few weeks. And therefore, I think Indian markets, in our opinion, probably are one of the strongest placed markets as we see in the global scene, at least as this calendar year or financial year.
Sure, and and that's there is evidence, supporting that as well, given the fact that FIIs have made a comeback. If you look at the last few sessions, and the sell-off has also slowed down on a monthly basis. If you look at the data, but let's talk about the stock of the day, BSC. Do you think now the stock is up for a re-rating, because now that SEBI has intervened in the expiry day wars? Does that remove a big overhang and fears of market share loss in the option segment? Do you think that's out of the way for BSC?
Seems to be the case. I don't know about the re-rating part, but yes, I think these concerns probably seem to be out of the way. And obviously, I think the street, which probably believed because of what happened in the past few weeks, that they will lose market share, and because of the market share loss, the earnings might be hit anywhere between 12 to 15 odd percent. I think all that probably gets recouped to a large extent. Obviously, I think the core business expected to grow at a decent pace. The annuity business also expected to grow at a reasonable good pace going forward as well. The macros big picture argument stays put. Equities as ownership is still very, very low in India compared to the rest of the pack. Demat accounts should get added at a thick and fast rate over the next few quarters, next few years as well. And therefore, the big picture argument stays put with them. Obviously, the bonus announcement also helps, and therefore, I think the recoupment in terms of the stock price is very, very evident, as you see on the screens right now. The momentum can very well continue for BSC, but one really needs to be looking at which risk reward buckets we actually fall in at this.
Okay, let's also shift focus to autos then. Of course, that was a talking point yesterday. Trump has started walking the talk on tariffs and 25% auto tariff. Tata Motors, expected to be worst hit. 30% of JLR volumes comes from US, and 20% of consolidated revenue may get impacted. But what does one do really with Tata Motors, especially for those who are invested? Is it time to get out finally, or how should one really approach it? Because a lot of pessimism has already been seen in the price. So how do you navigate?
Yeah, so I think the price has taken a hit, no two ways about it. So I think a large part of the price damage is now probably getting priced in as far as Tata Motors is concerned. Obviously, I think JLR volumes, one of the largest, around 36% as far as North America is concerned. And therefore, how do these tariffs play out is going to be very interesting. In fact, the trade deficit, Nandita, for US was $302 billion for the last 2 months, which is one of the highest that you've probably seen in the past few decades, which means that a lot of industries were actually front loading a large part before the tariffs actually start kicking in. And therefore, I think how tenable are these tariffs going to be, specifically for the auto industry, because I think a large part of the markets where at least the entry and the mid-level cars are being made, whether it's a Hyundai or whether it's a Kia, all are manufactured outside the US. So it's just not going to be tenable as far as the entire tariff impositions is concerned, because ultimately the consumer is going to take a hit. Till that point of time, I think the stocks might be beleaguered. They might actually stay lower unless there is absolute clarity emerging on this front. And therefore, I think within the auto pack, I think the two-wheelers, at least at this juncture on the domestic front, as far as the entire sector is concerned, probably look a tad bit better placed. TVS has given a stellar performance so far. Margins have held up, earnings have held up, volumes have remained strong, exports specifically have regained their strength as well. And even within the domestic mix, the geographical reach, the expectations in terms of more dealership, the electrical platforms, electric mobility platforms are doing well for them. So I think two-wheelers might do a tad bit better in my opinion. With the rural recovery also, stock like TVS might actually perform better in our opinion. Also, the piece in terms of global EVs, there has been a distinct slowdown that has been witnessed. The expectation is a mid-single digit kind of a growth that will probably come through. And again, I think the Chinese intensity, BYD, the kind of models and tech that they're producing, might also put pressure points in terms of how the global EV platforms, the investments that they've done, lower demand, might actually play out. So I think a safer bet that we believe is two-wheelers within the auto space in the Indian markets.
Okay, two-wheelers, the preferred bet when it comes to the auto space. But, the recovery that we've seen in the market in the last over the last 8-9 days, how should one really ride on that? There are clarion calls when it comes to which sectors to pick. A lot of experts have pointed out banks, private banks would be one of them. But any contra sectoral calls from your end, Mayuresh?
Nothing contra. I think what we're doing is domestic themes might actually do well. And Pandre, our institutional software, is actually throwing out a lot of these domestic oriented themes. So I think banks, financials, obviously a consensus. We like them selectively as well. But within the domestic themes, again, I think because of the expectations of a strong monsoon, rural recovery, I think a few of the agrochemicals players, a few of the fertilizer players, a few of the specialty chemical players, a few of the broader based stocks related to rural discretionary demand might actually do well, and that is being thrown up in the ideation watch lists that our software is probably throwing out at this juncture. A few hospital stocks within the healthcare space might actually continue doing well. Nandita. Our own sense is that what they've reported from a Q3 perspective, that can very well continue. And where there is a lot of pessimism as far as earnings outlook is concerned, this space within healthcare might actually deliver a consistent earnings growth, which the markets would ideally like to see, believe, and probably re-rate or give a better kind of valuation matrix as far as the overall markets are concerned. We are a little bit cautious, as I said, autos, outside two-wheelers and very, very selective on two-wheelers as well. And on the IT sector as well, we would ideally like to see the kind of numbers the IT sector reports, what kind of management commentaries come through, and what is the management perception in terms of the entire landscape from a macro and a micro perspective, which will be very, very clear in terms of Q4 numbers and the commentary.
Okay, last question really. Your thoughts on L&T after that ultra mega order win? Order inflow guidance, the company may surpass that because of that. But does it address the margin weakness that the company has been grappling with?
Again, I think what has really transpired is that execution was coming under some sort of a pump in the first half. Again, for a platitude of reasons. Monsoons, your elections, capex had slowed down, order tendering had probably got delayed. And all that is now back-ended, right? Now, whatever is expected to come through will be significant enough. So the kind of orders that L&T might probably keep on winning across different segments, including heavy engineering, including hydrocarbons, including defense, might be substantial. The margins are pretty reasonable. The working capital cycle is well controlled at this point of time. And therefore, I think the expectations in terms of the company expected to execute these orders well should happen over a periodicity of time. Again, leadership stock within the entire capex team that we've seen, a barometer to the Indian economy. And if the Indian economy with a big picture argument has to grow substantially, which it will compared to the rest of the globe, my own sense is that the mirroring effect in terms of earnings and balance sheet dynamics will play out on L&T as well. Rating rankings seem to be fine as we see the market with India. The other parameters, including institutional holding, ROEs, from a cancelling perspective, seem fine as well. So anybody holding L&T should continue.
Right. And is there merit in buying defense now with all the good news around order wins and even the fact that Europe is, ratcheting up its defense spending, and with these stocks like HAL, BEL up 20-30%, Do you think it merits, or do you think valuations are still a concern?
They might always remain a concern, but I think that is where I think the earnings are coming. The big picture argument again is that the growth visibility is there for the next 5, 6 years. Shipbuilders in particular, Nandita, is something that we like at Market India. Rating rankings are superb. Shipbuilding industry as a whole, 40% of the entire fleet as we speak is more than 20 years old, which means at some point of time, either they get decommissioned or they come in for repairs. So I think shipbuilders, both from a repair or a new shipbuilding perspective, will benefit significantly over the next few quarters, next few years. And again, all these orders will come at very reasonable margins, very, very decent margins, which means as they execute well, the earnings will keep on reflecting onto their balance sheet. So shipbuilders, Mazgaon, Cochin, in our opinion, rating rankings look fine. They're having super price strength as well, and therefore they might actually continue.
All right, that's the call on defense. Shipbuilding companies poised for a strong growth going forward. With that, Mayuresh, would like to thank you as usual for taking out time and joining us. Always a pleasure to get in your perspective, and I wish you a very, very happy long weekend as well.
Thank you so much, Nandita. Wish you the same, and always a pleasure being on your show. Thank you so much.
Thanks. Thank you. Well, on that note, of course, we've come to the end of this edition of opening bell, I beg your pardon. But yes, we are leaving the market, very mixed, so to say, because headline indices are witnessing some bit of selling pressure, but the mid-cap index is holding out, and it's a solid 0.8% kind of a gain coming in on the mid-cap index, with breadth firmly in favor of gainers. Let's see how things really pan out. Of course, right now we are fairly mixed, but with that completely timed out. Thanks a lot for tuning in to Opening Bell. I'll see you, at 3:30 with Closing Bell. Don't forget to tune in. But till then, have a great day.